All right, but in the meantime, we're going to begin with the markets and your money. Joining us in his first ever CNBC appearance, Ben Huneke. He is the head of investment strategy at Morgan Stanley. Do we need to be offended? Do you like us? Where have you been hiding?
I haven't been invited. Thank you for
inviting me. Well, you're invited and you came on.
Inviting me, Brian.
So thank you for...
Great to be here.
All right, sup it at her. So you guys run a scant $1.7 trillion. Yes. Even by our standards, that's a lot of money. Right now, what are the key questions you are getting from your client base?
I think it's really twofold. One is the American exceptionalism. So 70% of the ACWI now is allocated to the U.S. With what happened in April, Liberation Day, what's happened to the dollar. A lot of institutional clients around the world who allocate to the U.S. are thinking, should they be allocating at the margin less to the U.S. and more globally? That's one. And then on the retail side, the run-up of the market has really created a huge amount of tax issues in terms of appreciation, in particular around these Mag 7 stocks. And it's like, how do you handle those gains from a tax efficiency perspective?
I think somebody would call that a good problem.
It is a good problem, but
right. I've made so much money. Maybe put the stocks and do a tax-deferred ETF.
Yeah, that's true. But the question is, with that amount of gain, how do you diversify your risk while at the same time being tax efficient?
So this is interesting. We don't talk a lot about the dollar, but the dollar's slide against many world currencies, I think, is maybe even one of the more underreported stories of the year. We've talked about on this show about how many of these global markets, Germany, France, they've got a lot of problems, but their stock markets keep going up. How much is the U.S. dollar's weakness changing some of the investment game?
So look, I think investors around the world are thinking about how to allocate outside the U.S. And so they're looking at Japan, they're looking at China, they're looking at India, they're looking at Europe, and they're thinking about, if I have to diversify away from the U.S. at the margin, not a wholesale diversification away from the U.S., but which are the markets that I want to look at? And the dollar depreciation is certainly a big part of that. If you're a foreign investor, as the dollar appreciated, that's actually alpha to you. So if the dollar is depreciating and you're investing in dollars, that makes it tougher for international investors to stay invested in the U.S.
And a lot of these international markets have done well, not only because their valuations, I assume, Ben, correct me if I'm wrong, much, much lower than ours, but they might look relatively more attractive because of currency moves.
Yeah, and I think if you look over time, over the decades, we are at a point in time where the percentage of market cap in the U.S. is unprecedented. NVIDIA itself, market cap is bigger than every market except for Japan.
Their entire market?
Yes.
Like, say that again. I mean, one company in the United States, really two, because you got Microsoft and NVIDIA and a couple others that are sort of $4 trillion, bigger than basically every market in the world.
Except Japan.
Except Japan. Like, all the stocks in Germany, you combine them, their market value is less than NVIDIA. True. It's a hell of a stat. Does it mean anything?
Yeah, I mean, look, I think what it means is you got to be looking for opportunities outside the U.S. When you think about risks in the public markets, the index is very concentrated in a few names. And if you look at the gains in the public markets, very concentrated in a few names. So that is actually driving a lot of interest among all of our clients, both institutional and retail, into the private markets.